In this video, we're going to be talking about my favorite financial dividend stock for 2022. It is currently my number one holding in my financial slice of my M1 Finance portfolio. We'll talk about why I like this stock and why I believe there's a lot of upside potential. They're also yielding above 3.5%, so this is a very solid. Some people would call it a high yielding dividend stock. So we'll talk about this company. The stock is TD Bank, ticker TD. We'll go into why I like this stock more than other financials such as JP Morgan or Bank of America and different things like that. But before I go any further in this video, like I said, if you enjoy it, you make sure you give the video a thumbs up and you subscribe. You turn on those post notifications for videos coming out every other day. You know how it goes. Thank you so much for just clicking on the video again. Thank you so much for supporting the channel, all that good stuff. Enough of that intro, let's get into the video. So, we're looking at my current portfolio. We will see on the 1 year, it is up 34.41%, and over the past 3 years, it actually only goes back till May 20th of 2020 because I do own some JEPI, which that fund was originally initiated on May 20th of 2020, I believe, if I'm not mistaken, and that shows us 76.67% returns. Now we're looking at, you can go see this portfolio if you want to. If you want to use M1 Finance, use my link in the description below. You and me both. If you deposit $100 by using that link, we'll both get $50 free dollars. It's free money. You can use it. It's automatically. Like, imagine investing in like a 4% yield. You're already getting 2% annual dividend income. Free money. All that money solely compounding. But we'll go right here into my banking and fintech slice. And what you will see is that my number one portfolio, my number one holding in this slice is TD with 40%. Now let's talk about why I like this stock. Over the past year, it is up 36.29%. Now, ever since May, it did have a little bit of a come down, and I'm not exactly sure why that is, but just looking on some different things, I would assume it could have been that TD, Toronto Dominion Bank, is a Canadian bank. And back then in June, it was kind of announced that, hey, U.S. banking stocks can increase their dividends because ever since of COVID, there was a restriction on these stocks to where these banks could not increase their dividends or do share buybacks. But these kind of restrictions were lifted in Canadian stocks and Canadian banks. It was recently lifted in November. And so what did TD do? Toronto Dominion Bank just increased their dividend by a lot. Okay, their quarterly payout jumps by 10 cents per share. Now this is in Canadian dollars. If we go to right here on Seeking Alpha, it'll give us a US dollar. We can see that their past payouts have been roughly 63 cents per share. Now what they did do is increase to about 70 cents per share, which are some high quality dividends. Looking on the dividend scorecard of this company, what we'll see is that they have a 5-year growth rate of 9.11%, a dividend growth record of 7 years, and a payout ratio of just below 40%. TD Bank says in their investor presentation that they aim for a 40 to 50% payout ratio, so there is room to increase this payout ratio and increase payout to shareholders, which we always like to see. Looking on some more different aspects of the company, they have a PE ratio on Robinhood of 12.21, and on Seeking Alpha, a forward PE ratio of 11.89, showing that the stock is pretty fairly valued for a financial stock. Usually they have lower PE ratios, but still is good value. They have an earnings per share of $6.31 on a forward and a yield of $2.51 trailing 12 months. But when you do the math on that 70-cent new payout ratio, 70-cent payout dividend per share, you do that times 4 because they pay out their dividends on a quarterly basis, you would get about $2.81 per share. But still, a very, very solid payout ratio. And their dividend yield is now sitting at 3.75% with this increase, which is huge, huge stuff. Now, I kind of want to talk about a whole market outlook before I go into more of TD's financials. Let's talk about this. Goldman CEO sees policy, not the pandemic, as the biggest risk ahead for the financial markets. So this article kind of goes in that different things like inflation are going to have a huge impact on the market. And there's been a lot of analysts, like I want to say it's Bank of America and Citigroup, different banks or analysts at these banks are saying they would not be surprised if the year of 2020, the decade of 2020s, is going to be a lost decade, meaning that assets, especially stocks, are going to either decrease in value or just be completely flat. And how do you make gains in flat markets like this? You invest in dividend stocks. And especially in times of high inflation, financial dividend stocks are going to be some of your best performing assets. Okay. And with inflation rising at these incredible rates, it's almost like right now. Generally speaking, financial stocks are a good way to hedge against inflation if inflation does not get out of control. So we don't want to see hyperinflation. Now, we've seen like 6% rates, which is like the highest since the 90s. But if it gets into like 10%, 20% inflation rates, that's when things get out of control and we will start to see hyperinflation, which is not good for anything. Like, it's not even good for growth stocks in that kind of basis. But it's a really fine line, and banks do tend to do well in mildly inflationary environments. Now, this is a little bit higher, but this should be increasing interest rates, including the fact that Powell and different things are kind of expected to increase interest rates. Now, I know TD Bank is a Canadian bank, but they have some American locations, and with all the interest rates, it kind of plays a domino effect across the whole economy, but we won't be going into that. And if inflation gets to the point where the Fed has to raise rates, and we're talking about raising rates right now, it usually trickles down into higher rates on mortgages, credit cards, auto loans, and things like that for the banks. All of the ones which will give more income to banks. So when interest rates are higher, banks make more money. It's simple. Interest rates and bank profitability are corely connected. So with interest rates potentially rising and inflation, financial dividend stocks are one of the top performing assets. Remember, I'm not a financial advisor. This is not financial advice. But let's talk about some more stuff on Toronto Dominion Bank and why I actually like this stock. So, TD generated an adjusted net income of $3.87 billion in Q4 of 2021 compared to 2.97 from the same period in 2020. For the full year of 2021, they made net income of $14.65 billion compared to $9.97 billion in 2020. So these are increasing rates that we really, really like to see. Morningstar analysis says Toronto Dominion Bank is trading below their fair value of $76, but they're trading below by 51 cents. So they're trading near fair value, which is good stuff. You don't want to see that your company is over fair value. And we're trading near fair value, which is what we really like to see. Looking on some price targets for Toronto Dominion Bank, we have 6 buy, 4 hold, and 1 sell. But there's average price target gives us 10% upside. The low is Canadian $99, and we still trade at 95.45 Canadian dollars. So we are trading below our lowest price target. But this is kind of what struck me, is the selling is an $85 price target. Now this could be Canadian dollars, but still, 85 Canadian dollars, and compared to right now prices back then, we're still sitting at near fair levels in that selling price target. We did have some selling pressure, we did. But we're still coming back up, and we're looking very solid compared to price targets. You can see the upside potential is very solid. Average forecast on this one is up 31%, 13% minimum, 46.5% maximum. Huge upside potential on the stock. Now, Toronto Dominion is on Yahoo Finance, has an $84.66 1-year target estimate. This company has a market cap of $137.5 billion. But what Toronto Dominion right now is they're empowering their customers. When you invest in a stock, you want to make sure that you are investing in companies that have and provide value to their users. The number one thing when it comes to investing in a company and buying a company is, do they provide value not only to the shareholders but to the customers? Because my philosophy on this is, if a company can provide value to their customer, the value to shareholders will follow through. It's kind of like when starting a company or starting anything. If you're in it for just the money, you're doing it wrong. But if you're in it because you're providing value and you enjoy doing what you're doing, the money will come with it. And that's how it is with everything. So I could go into deeper analysis on that, but I'm not going to go into that in this video. Okay, we'll look on some different things of Toronto Dominion's kind of investor, like income, different things like that. We can see that their net income is just huge right now. Now, there has been some decreases in their wholesale banking. It was $420 million for the quarter, but a decrease of 14%. And this was mainly offset by higher lending revenue, advisor fees, and equity underwriting. And also, there was a little bit of a decrease in, I forget which part it was. I want to say it was their investment banking or something like that. I don't know where it was, but it was because of lower trading volume. And honestly, the market right now, it's going to be a little bit of a part of that. It kind of tails back to Goldman's CEO saying he expects a slower market over the next few years. But we'll see right here. If we go to the 5 year, the market, like, let's just look up SPY. Okay. The market over the past few weeks or the past few months, let's just go with the past few months, has been very volatile. Okay, kind of all over the place and a big dip. Now, back here, whenever the same quarter of 2020, look at that upward momentum. Huge gains could have been made. We had a dip right here. That's kind of what offset a lot of Toronto Dominion's banks, but grand whole wide, zoom out, look at all the net income, it's still positive, showing great numbers. So even with these offsets, this company is still providing great value to shareholders, which is very, very solid numbers. And here's kind of just their dividend history. 164-year continuous dividend history. That's huge. Dividend yield of 3.7%. Here's their target payout ratio range of 40 to 50%. From 1995 until now, they have an 11% annualized growth. That's huge. 11% annualized income increase on your dividends. If you can keep that going in your portfolio year over year for a long time, you're going to be getting incredible snowball effects, which is huge. Now, this is $3.16 in Canadian dollars. You do that, that's about $2.50 United States dollars. But forward with the new numbers, 70 times 4, you're going to get $2.80. So that's pretty solid money that you can be generating from Toronto Dominion Bank. And so whenever I get the chance, I do buy dividend stocks all the time. Like, I like to go with M1 Finance and kind of just straight up buy into my whole fund. But a lot of times recently, what I've been doing is selecting individual stocks. And Toronto Dominion is one of those stocks that I have actually bought a little bit more of recently, just because I see that financials have the potential to do a lot better than other asset classes over the next few years, kind of shifting my whole portfolio. Like, I literally used to invest in just strictly growth stocks, and now I'm kind of shifting into dividends. I don't think that the growth industry will be as solid over the next few years. I've actually sold out a lot of my growth stocks over the past few weeks, but we won't even talk about that in this video. But everybody, that's what I have for you in this video. So if you did enjoy it, make sure to subscribe, turn on that bell and post notifications for videos coming out every other day, just like we said at the beginning of the video. Thank you for making it all the way to the end of the video and supporting the channel. Leave a comment below if you like Toronto Dominion stock. I always like to see what you guys are doing, what you guys are thinking. I will be doing a portfolio reveal showing you guys how much I have in my M1 Finance portfolio. I'll even show you my TD Ameritrade, showing you guys my stocks there. But again, thank you for making it all the way to the end of the video, and I will see you at the next one.